Hey everybody, how is it going today? Well, in this video I want to go over Senseonics Holdings. They just had a news article that came out a couple hours ago and the stock is up big. So I want to go over the move that it's having today, the news that just came out, and I want to give you my thoughts on what could be happening next. And then of course after that I have some other great looking charts that I want to show you. All right, well, Senseonics is up pretty big on the day, and there was a news article that came out just a couple hours ago, but it doesn't seem too significant. It basically says that shares of Senseonics Holdings are up 20% in Tuesday's trading at $4.96. SENS shares have been strong of late as investors await information on FDA approval for its diabetes monitoring product, but it says SEC filings released today don't appear to be the reason behind the rally, as all are from December of 2020. And the article also says that one of the main reasons that Senseonics has been a popular penny stock amongst traders is its impending FDA approval for its continuous glucose monitoring system. The Eversense CGM system is thought by many to be a disruptive form of technology in the ongoing fight against diabetes, one of the most devastating and commonly diagnosed diseases in the United States. Now, rather than intermittently testing blood throughout the day, the new Eversense CGM system places a sensor beneath the patient's skin and updates it in a smartphone app every 5 minutes. If approved, it will save diabetes patients hundreds or even thousands of needle injections per year for blood tests. Now, that we already knew, and that's why SENS is so popular. But I think this article is kind of interesting. It was because it's just pointing out that SENS is up pretty good on some decent volume, and there is no significant news. So what does that tell you? That there's probably going to be some big news coming, and the people that are in the know are taking their positions now. All right, so now we'll jump over to my TC2000 trading software, and this is the current daily chart of Senseonics Holding Incorporated, ticker symbol SENS. And first off, let me apologize if the sound is off. It might sound like I'm talking from inside my toilet bowl or something. But I am having microphone issues again, and I'm doing the best with what I have. I'm going to have to buy another one. But anyway, this is the current daily chart of Senseonics, and we can see at the moment it's up about 18% on above average volume already, and this is intraday, so that volume is definitely going to be well above the average. It is gapping up today on pretty much no news, so that is pretty interesting. This is a very bullish chart, so a gap up isn't really too surprising, but this is a pretty decent gap up, and it's holding it pretty well on good volume. So I am guessing that there's probably going to be some significant news coming out on Senseonics Holdings. Now, that being said, I did have an options position on SENS that I bought a couple of weeks ago, and I closed it out today. I paid 40 cents for them, and I closed them out today at $1.75. So, I mean, it was a decent gain. It seems like I should have made more than that because the stock has went basically straight up, but I closed out that position because they expire on Friday, and this is a short week. I'm running out of time. So if it goes up anymore, then I'm probably going to be upset that I sold them. But if we have any kind of a down day, I mean, if this thing pulls back to the 8-period exponential moving average, most of that gain is probably going to be wiped out. So I figured I might as well take the gain while I have it. But that being said, I think Senseonics Holding still looks super bullish, and if you're holding the stock, I don't think there's any real reason to be getting rid of it right now. I think it could be starting the next move up. I mean, personally, it's a little extended. If I wasn't in it, I would be waiting for a little bit more of a pullback before I got in, but if I was already in it, I'd be sitting tight. But if we go to the 15-minute chart and take another look at this recent action that this stock has had. I mean, it's just been a picture perfect stair step up. Then it made this very easy to see triangle consolidation. And when you see that, slap those lines on it, and then when it busts over those trend lines and holds above that 8-period exponential moving average for 3 bars, then you know you probably have a pretty good chance of the move starting to take off, and that's exactly what has happened. It pulled back just a slightly below that 8-period exponential moving average on the 15-minute chart, but if I was waiting for this signal, this wouldn't be my exit signal. I would look for a complete breakdown of this pattern right here before I got out. So a break below the many moving averages on this entry signal doesn't necessarily mean an exit for the way that I trade, because once you break out of this pattern, you want to give it a little bit of room to move around in case you get the explosion up, which we are getting in Senseonics. And if we zoom in just a little bit closer to the current move, it's making a decent looking bullish pennant, maybe even a little bit of a bullish flag. So intraday, this still looks like a super strong stock. You had plenty of volume coming in early on, so that is healthy for a breakout. But if we back out one more time, you can just see how nice this stock gets going. It makes some very nice triangle consolidations, and it starts breaking out of it. And then when it starts moving sideways after this move up, you just wait for that break above those moving averages, and then once you get that move up, that's your signal to get in. But Senseonics holding, if you guys are still in it, or if you're still in it, you want to sit tight, but if you are thinking about getting in it, I personally would wait, even though this is a very bullish pattern. So if you do wait for that pullback, you do run the risk of this thing leaving you in the dust, because it certainly could do that. But I am expecting some kind of news to come out in this in the next couple of days, just based on the price action and the volume coming in. This move is kind of selling off today. So as of right now, I feel pretty good about selling those options, because I sold those options. I think those options made it to a high of maybe around $2. So I sold them near the high. But as of right now, I'm feeling pretty good about that. But if this thing gaps up to 6 tomorrow, I'm going to feel like garbage. But anyway, that is my take on Senseonics Holdings. Let's get into some other great looking charts. All right, guys, let's get into some of those other charts. Now, first off, let me say I am not a financial advisor. I'm not telling you guys to buy these. All I'm saying is, in my opinion, they look pretty freaking good. And the first one I want to start off with is ADIL. This one is holding the highs perfectly. It's making a very nice bullish pennant or bullish flag. If this thing closes with a nice green candle like one of these two right here, coming off the 8-period exponential moving average, that is when we want to enter. That is when I would enter this stock anyway, because that means that it's probably going to be starting its next leg up. ADIL is probably the nicest looking chart that I see that I do not own, of a stock that I do not own at the moment. So ADIL, if we break this down intraday, what you want to do is follow the rounded bottom. Once you get that little pennant formation, you see it had a quick sell-off a few days ago when the market had that huge sell-off, but it rebounded immediately and it continued into that rounding bottom. Now it is moving up the right side of that rounding bottom, and if it can break through this high with a nice bullish green candle, that means chances are it's probably going to be starting its next leg up, and that would be the entry that I would like to see for ADIL. The next one I want to show you guys is QH. QH is an interesting play. It's starting to make a rounded bottom pattern as well. If we back out just a little bit, we can see how long this pattern has been going on. It's basically been going on since this company has been traded. It's been going on for almost a year, and it looks like it is finally starting to gain momentum. You look at these candles right here. You got 1, 2, 3, 4 that were potential breakouts that pulled back. So it's only going to test that so many times before you finally get a break to the upside. So QH is the one that I am definitely watching. I am watching this resistance level right here. If it can bust above that resistance level and hold it, that is going to be my signal to get into QH. But that one is a nice looking pattern. Let's get into one I've talked about before and that we've also talked about on the Patreon. TRX, this thing is holding above that 8-period exponential moving average perfectly. This is exactly what I want to see. As far as I'm concerned, today could be the entry point, because this thing had been moving sideways. Volume's been pouring in. It jumped above all those moving averages, and it is now holding it. Once a stock has held below this 200-period simple moving average, this yellow line, it can be very hard to get over. And sometimes when they jump above it, they come right back below it. So what you want to see is a break and then a hold, because you want to leave that moving average in the dust, because that thing can be a pain in the butt if you keep getting below it. So TRX is looking very good right now. It's holding those moving averages. The thing that would make it look even better for me is if it had a nice green candle coming off of that moving average. That would be an even better buy signal. But if you wanted to take a chance right now, even though it's not a bullish candle, it's pretty much sitting on that 8-period exponential moving average. So you could quantify your risk quite easily. You could actually put it below this 50-period simple moving average, which isn't too far below it. So your risk wouldn't be that huge on TRX if that's something that looked good to you. The next one I want to go over is GPL. This is one I talked about before as well, and actually when I put this on my list, it was trading near the high of the day. It looked a little bit better, but that's still fine. It's still holding above those moving averages. It's coming around the other side of this rounding bottom. It's already broken above this resistance, and it's pretty much holding it. So as long as you get another decent looking candle coming off of this, I think that's your buy signal on Great Panther Silver. And if we back the chart out just a little bit, we can see it's already been busting out of this long-term descending wedge. So this thing is just itching to go higher because this is a long-term bearish, or actually it's a bearish downtrend, but it's actually a bullish pattern once it breaks out of it. Had this nice false break a few months ago, and now it is starting to move higher, and you can see all the volume that is pouring into this one. So if this thing gets a green candle right in the next couple of days or so, a nice green bar like this, I'm probably going to jump into Great Panther Silver because that's just an absolutely beautiful pattern. You basically got you're getting two bullish patterns for the price of one in this chart. All right, the next one I want to talk about is VGZ. And surprise, surprise, another precious metal stock also breaking out of the descending wedge, and it is starting to form also a rounded bottom when you look at the entire pattern. But I was watching this descending wedge earlier. I was waiting for the breakout, but that's when gold got really weak for whatever reason, but it did come all the way back down to that trend line, and now it is kissing it and is taking off. This is called kissing the trend line goodbye. That is what you want to see after like a descending wedge. You want that breakout. Normally it comes down faster before it takes off. Like usually you get a breakout like right here, it comes back like maybe a week later and then it takes off. This is actually kind of rare to see it come all the way down here a couple of months later and touch it and start to take off. But hey, they all don't just play out absolutely perfectly, but VGZ is looking very nice as far as I'm concerned, and you got all that bullish volume coming in, and you got a bullish candle at the moment as it's starting to break higher. So VGZ is definitely one worth keeping an eye on. Next one I want to go over is NEOS. NEOS was higher as well when I put it on my list, but nonetheless, it is still coming off the other side of that rounded bottom, and it is starting to accelerate. So any pull after the trend starts to accelerate, it's when it pulls back to the 8-period exponential moving average. I'm sorry if I'm talking a little too fast here. I'm just trying to get through it. Once it comes back to that 8-period exponential moving average, that's your signal to get in. You know, once these stocks get into healthy uptrends, you want that 8-period exponential moving average to be your entry point because that is usually the good pullback that leads to the next move up. But NEOS is holding these gains perfectly, and I expect it to hold that 8-period exponential moving average, and once it touches it, if we get a bullish candle, that would be my entry to get in. So definitely put NEOS on your watch list. The last one I want to go over is SYN. And this is one I'm actually still holding. And this thing is just coiled up to move higher. But for whatever reason, it is like running in syrup. But once this thing does get that bullish candle, hopefully it does get it because like I said, I am already still in this stock. But I think it's a very bullish pattern at the moment. All we need is that bullish candle on this side, and then we could be off to the races, and I think it should easily take out this old high of $1.70 if it gets going. But SYN definitely looks super good. Before I end the video, I do want to get to a question. I got a question from Clara, and she asked me to take a look at a couple stocks. The first one is SING. And this is a cheap stock, single point. It's a fantastic looking pattern. It's only a nickel at the moment, so that is definitely a cheap stock. If you're looking to get into a cheap one with a lot of upside, I think SING is looking pretty good. Just a beautiful pattern. I don't know. As far as I am concerned, Clara, I can't really poke any holes in this one. A ton of volume, but it's only a 5 cent stock. But I think it's a great looking pattern, Clara. I don't know if you're in this or if you're considering getting in. It's pulling back to that 8-period exponential moving average. A lot of times with these stocks that are in, like below a dime, a lot of times they don't hold that 8-period exponential moving average. Sometimes I'll play support levels more than I'll play the moving averages when I play stocks that are under 10 cents. But if they do come down to the 21 period exponential moving average, that could also be a good buy signal. I just feel like when they're under a dime, they tend to break that level. That 8-period exponential moving average tends to not be concrete when you get really cheap, but the 21 period seems to work pretty good. But SING looks good. She wanted me to take a look at HYSR. And this is a cheap one as well, Sun Hydrogen. And this one is holding below those moving averages at the moment. This one is only a 19-cent stock. So, Clara, you are showing me some pretty decent cheap stocks. Let's go to the 15-minute chart. Let me take a see. Now, this is what I talk about in some of my other videos when I'm saying you want to always use a limit order, because this is some poor schmuck who put in a market order to probably sell his stock, I would imagine, and the market maker executed it way down here. Instead of getting about 19 cents or so, they probably give him about 2.5 cents. And if you put in a market order, there is nothing you can do. This has happened to me at least twice that I can remember, and I called up and complained, and there was nothing I could do about it. I just had to take it on the chin. That is why I always use limit orders. If this stock was trading at 19 cents and I wanted to get out immediately, what I would do is put in a limit order for, say, 18 cents or maybe 17 cents. And being that you already have a bid that is above that level, say at 19 cents, it should automatically execute it at that 19 cents. But it will not execute it below 17 cents. So if you want to give up like an extra penny or two, say, on this stock, just so you can get out, if you want to get out right now, don't put in a market order on these stocks that are under a buck, because eventually you're going to get skinned alive, because this has happened to me at least twice that I can remember. It's been a long time, but I don't use market orders ever anymore. But that's what this is. When you see this on a chart, this is some poor guy getting scalped down here. You can probably shed a tear for him if you want, but that is a painful lesson to learn. I learned it a couple times. But HYSR, and another thing that really sucks about that is it screws up the chart, man. You got this line all the way down here, so it's expanding the chart, so it makes it harder for me to read them. So don't use market orders. It screws up the charts for guys like me. But anyway, this one is pulling. Let me see. Let's go to the hourly chart on this one, actually. But if we look at the hourly chart on this one, it's starting to make a little bit of a triangle consolidation, which of course is a good thing. It's holding that low right at 15 cents, and that was the high from the first move back on the 28th. Held that low once, twice, now 3 times, except for this guy right here. He's still trying to get above it. But it's held it 3 times. I think if you get a break above this triangle consolidation, that should be the signal for the next move up on HYSR. But I think HYSR is a pretty decent looking pattern. This is not a bad time to be buying it, actually. If you did want to take a little bit more risk and get in before the potential breakout, you could buy it right around these levels. You just want to get out if it breaks below that 50-period simple moving average, that blue line, and this support. Let's get to the last one she asked about, which was LLKKF. LLKKF is another cheap stock. It's trading at about a quarter, and that's a very similar pattern. So I'm assuming you have been watching some of my videos, Claire, because a lot of these patterns are exactly what I like to see. These are just stocks that are taking a pause in the uptrend, and they're winding up for that next swing up. So I think LLKKF is definitely one you want to watch as well. Let's take a look at that one on the hourly chart. Very similar pattern. Once you see these things starting to materialize, you slap these lines on it, draw that triangle consolidation, and patiently await the breakout, because there's no need to get in too early, because you never know if they're going to break out. Only buy the breakouts because, you know, most of us only have a certain amount of capital, so you want to make sure that you're in those patterns that are starting to break out that have the best chance of showing you gains. But that is the last one for this video. Hopefully I answered your questions, Clara. If anybody else had any questions that I missed, just submit them again. And I'll try to get to them in the next video. These were the only ones that I had written down, so sorry if I missed your questions. All right, guys, well, that's all I have for this video, so I'm going to end it right there. But if you have any questions about any of these stocks, or if you have any other stocks you want me to take a look at, please leave them down there in the comment section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button for the YouTube algorithm and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, guys, and until next time, take care.